Hey there, my name is Adam Winnig, and in this quick video I am going to walk you through the backtest results as well as the forward test results for Titan G27, and I'll make sure to share these two links with you, both the backtest and the forward test. So let me just explain this really quick, what we've done here. You'll notice on this Google Sheet, you'll see different lot sizes per account balance. So you can see a 0.01 per $2,000 in the account, which is considered to be a conservative lot size. You can see the 0.01 per 1,500 here. That would be considered moderate, and the 0.01 per 1,000, which would be considered more aggressive. You can see here also we have included screenshots from Quant Analyzer. Quant Analyzer is simply a software that can analyze multi-pair strategies like the Titan G27 strategy. We've done calculations here to make things simple for you. As you can see here on a 0.01 per 2,000 simulation, this is starting from September of 2007. It averaged about 14% with 25% max drawdown. Now, these are backtest results, so it doesn't take into account things like slippage, brokerage commissions, and any other random variables that can happen in a forward test. So we don't expect the forward test to be as good as a back test. The purpose of a back test is to make sure that the system is robust. And that it can survive different market phases, like the market crash in 2018, like COVID-19 market crash that happened as well. So you'll notice here that at the 0.01 per 1,500, you can see that the average monthly was about 21% with 34% drawdown. And again, these are just backtest results. Obviously, they're impressive numbers, and we don't expect the forward test to be quite as well in full transparency. The 0.01 per 1,000, you can see to 29% per month with 51% max drawdown. Over here on a monthly performance, you can see the dollar amount made, and you can see that there are red months. There are losing months, and that's to be expected with this system. You can see also that it has about a 58% winning percentage, which is, it's not incredibly high, but it has the risk to reward ratio in your favor, which is more important in a long-term robust system. So you can see different stats, like you can see the stagnation in days. You can see this, for example, over this period since 2007, which I guess 13 years, you can see there was a period of basically 6 months where no money was actually made. You can see it right here. These are known as stagnation periods where money's not being made or lost. And these are expected with really robust, good long-term trading systems. So be aware of that there may be periods where a new account balance or new account equity high is not made for quite some time. So you can investigate this and look at it more as you'd like to. The other thing I'm going to show you here is the Titan G27 MyFX book forward test results, and this is arguably more important. A couple things to notice. This is just a demo or a tracking account. It's also using a fixed lot size, so that means that we are not using a, for example, 0.01 per 2,000. This is just strictly a 0.01 lot size, or a 0.1 lot size. And you can see that it's traded the same lot size the entire time. So we do expect, as the months go by, the monthly returns to go down just because we have not changed the lot size. The purpose of this account is strictly for tracking account to make sure that the execution is happening properly and whatnot. So a couple of things you can notice. You can see that we started this account on February 2nd. It's up about 60% here. It's averaged about 7.27% in monthly profit, and the drawdown's only been 5.85%. So this is extremely conservative. This would be like running a 0.01 per nearly $4,000 at this point. So it's, you know, nearly twice as conservative at this point as this back test here. So a couple of things that you can look into. You can see the total number of trades. You can see the winning percentage is 57% on buy trades, 52% on sell trades. You can see things that are really important, like the expectancy. The profit factor doesn't really matter. The expectancy is important, meaning that on each trade you're expected to make about 75 pips, which is an incredible expectancy. No matter if you win or lose, on an average, you'll make about 75 pips. You can see the best trade was $789 and the worst trade was $384. So we have the risk to reward in our favor in the best and the worst trades. You can see the average trade length is about 21 minutes, or excuse me, 21 hours. So it's under a day, which is good. So we'll incur less swap fees. You can see the average winning trade is 242 pips, while the average losing trade is only 132 pips. This is also really important. Again, you can see all the different information that you want to see on this. You can also see that the market, the way that this trading system works is during a trending market, which happens, 70-75% of the time, the system is not going to be making a whole lot of money during a trending market. It may even lose a small bit of money like we saw in July. During a trending market, when a trending market forms, that's when we're going to see big profits like we saw here in March, and we're also seeing here in August with a lot of volatility with gold. So the key with this system is using it and waiting for the trends. You may have several months in a sideways market or ranging market where you're not making a whole lot of money, but you have to wait for the trends. So anyways, we'll include these two links here, both the back test results as the forward test results as well, so you can follow along and you can see kind of the results, as well as you can join our Facebook group on Facebook called Edge Traders Official, where you can see other members' live results and how they're all doing. Okay, so go ahead, click and download these links, and we'll talk to you soon.